Hi, this is Alessio, Rastani, the trader. Hope you're well. In this video, we're going to discuss something very important. And chances are that what I'm going to discuss today will be of use to you and very important to you, especially for the future when it comes to looking at the stock market in general. And let me just say this, even if your main focus is not the stock market, maybe your focus is Bitcoin or cryptos or Forex or currencies, I would still encourage you to watch this video and actually learn from everything we're going to talk about in this video, because chances are you may need this at some point in the future, especially when it comes to things in the economy or when it comes to investing in the stock market, as any sensible person should be. Now, here's what I want to talk about, which is whether there's a warning signal for the stock market. And in fact, is there some kind of warning that we're about to head for another round of panic selling in the market? Or actually, is it the opposite? Has that warning signal been now neutralized? So what we're going to talk about is one of the most important theories of chart analysis and also economic analysis. Is called the Dow Theory. The Dow Theory, essentially very simply put, looks at both the Dow Transportation Index, in other words, the transportation sector, and the Dow industrial sector, the manufacturing sector. So why these two? In fact, why even the Dow transportation? What's the transportation got to do with anything, right? Okay, so let's talk about that. You see, according to the Dow theory, the economy is very sensitive, not just to companies that manufacture stuff, but also companies that take stuff. So the companies that ship and transport stuff. So in other words, what we're looking at are companies that make stuff, the industrials, and companies that take stuff. Now, again, the reason behind this is that, according to the Dow theory, if the economy was to take a hit tomorrow or next month, the first sector, the first industry that would take the hit is the transportation sector. For example, let's just imagine that less people or fewer people next month started ordering stuff on Amazon, or fewer people started traveling or went abroad on tourism. That is often the first sign, the first symptom of an unhealthy economy. You cannot have a healthy economy if companies are making stuff, but fewer people are ordering them, or if there's less demand for those products. You need to have both the transportation and the manufacture sector doing well. So according to the Dow theory, the reason why we look at the Dow transports is because often they are a leading indicator, and often what happens to the Dow transports are showing you the first inflection points, the first turning points in the economy. All right. So the transportation sector is very sensitive to shifts in the economy. All right. Now, so now we've discussed this, let's talk about what's going on here on these charts. You see, there's also something called the Dow Theory Sell Signal. So what is the Dow Theory Sell Signal? Put very simply, and again, there are variations of this, but one of the main versions of the Dow Theory Sell Signal is the first you need to have, in other words, for the sell signal to come into effect, first you need to have a crash, or in other words, a drop in the stock market of about 5 to 10%, which, by the way, is exactly what happened back in January to February. So that was the 5 to 10% drop in the market. Then you need to see a bounce, about a 3% bounce on average, which is exactly what happened afterwards, after February. Okay? After the bounce, for the sell signal to be generated, you need that particular market to then reverse and then close below the first low after the initial panic, the 10% drop, the 5-10% drop. So in other words, after the bounce, you need to have the price then close beneath the first panic low, which, by the way, happened on both the transportation and it also happened on the Dow. Now, let me just also mention that it's also important to have a look at the S&P as well, because often what's happening on the S&P also can be very important. In fact, I think perhaps even more important than the Dow Industrials. So look at the Dow Industrials and the S&P for clues, in addition to the Dow Transports. All right, so now we've covered that. Let's just see if this Dow Theory Sell Signal was generated. And in fact, it was, as you can see here. The Dow Theory Sell Signal was generated in April, right here. Okay, so the criteria for a sell signal was met about a week or so ago. So the 3-step criteria for a sell signal was generated this month. Now, the question is, okay, so the Dow Theory Sell Signal was generated, now what? Well, usually that would be followed by further selling, by further round of selling. But some market timers have actually said, well, maybe the sell signal was a false signal. Maybe this was one of those occasions that the sell signal actually ended up being neutralized. And in fact, it was a false signal. Because look what happened to the transportation index. Transportation index quickly reversed direction, and so did the industrials. They quickly reversed direction. So there is a case to be made here that the odds of a stock market drop right now are about 50-50, because on the one hand, we have a Dow Theory sell signal, but on the other hand, the Dow Transportation Index has recovered, almost recovered. I mean, they've come back to the previous highs, but certainly that panic selling that usually would be followed by the Dow Theory sell signal has not happened. But of course, there's also a bearish case to be made here, because if you just take a look at this chart of the S&P, the S&P is still below its downtrend line. And it also, you might even say that it's actually forming some kind of a downtrend, making lower highs, and again being below its downtrend line. So right now, the odds of a market rally or a market drop in the major stock markets is about 50-50. It's about a 50% chance it might go higher, 50% chance it might go lower. So in order for this balance of probability to be shifted towards the bull side, towards the buyer side, we need to see follow through, and we need to see the market gathering strength to push through resistance. So because right now the probability of a rally or the probability of a crash in the market is about 50-50, and again, we're caught up in this scenario where we don't know whether the sell signal on the Dow theory has materialized or has been neutralized, we cannot with a high degree of certainty say which direction the major stock markets want to go. But it certainly is going to be very interesting, because we could find out in the next few days and see which specific signal has taken hold. All right, guys, thank you very much indeed for watching this video. And if this video has helped, please give it a thumbs up. And please remember to subscribe to our videos for future updates. Thanks a lot.